Hello, friends. Today I want to talk to you about 401k plans and real estate. Why? Because in the last few weeks, I've seen a lot of excitement in the real estate community. I'm talking to a lot of clients who want to buy properties this year. A lot of people are thinking interest rates going to drop significantly. A lot of people are thinking that property prices are about to rise, so they're ready to jump into the market. So I want to kind of talk about all of that stuff today, just so kind of prepare you guys so you don't really get surprised. But anyhow, each market a little bit different. So if you want to talk about something in particular, you want to get my opinion about how I look at these things and what kind of numbers I look for, and then I'll be happy to share that with you guys in a private consultation call. So just go to taxcodeadvisors.com and set up a call from there, and then we'll take it from there. So let's talk about real estate in general. So President Trump wants to make things affordable this year. That seems to be his focus. He has talked about it many times, and he is kind of showing us through his actions as well. For example, when he talked about 10% limit on credit card interest rates, hey, that makes things affordable, although we shouldn't be really borrowing funds to begin with on credit card, but that's a different story. So maybe he should really look at things that people don't have to use their credit card instead of limiting the fees on the credit card. I mean, at least that's what I would do. Uh, he has also talked about buying mortgage-backed securities, right? So that is certainly can help with bring the interest rate down, and it has help a little bit. But again, I think today I was looking at the market and interest rates are back up again. So that is certainly a step in the right direction as well. And then he's putting a lot of pressure on the banks as well. So he's doing everything he can, I think, to try to do something about affordability. But let's talk about affordability. All of these things are really good rhetorics. They're very good for television. They're very good for Twitter accounts or YouTube videos. Yeah, you can talk about them a whole day long. So when President Trump says, "Hey, I'm going to let people take the money out of their 401k account to buy the homes. Why should they be left behind?" It sounds good on theory, but on paper, the reality is something different. So let's go back to affordability. Uh, why does President Trump care about affordability all of a sudden? Why didn't he really care about it, when he was putting up all of these tariffs on other countries, right? Why has he changed his tone all of a sudden? Well, because of midterms. We all know that midterms are coming, and an average American is facing a lot of challenges with affordability. And no matter what your income group is, if you're, I guess, at a certain point, that's not really even a question. But for most of us, affordability is a problem. So President Trump sees that if he doesn't fix that problem, that can potentially hurt him in the midterms. All right. So that's his agenda. That's what he wants to do. So what is affordability? Well, when we talk about affordability, especially in terms of real estate, number one, we need to bring the home prices down. Okay. So can President Trump really do that? Can he bring the home prices down? Well, how would he do that? Well, one way to do that would be is throwing the economy into recession. I don't think he plans on doing that. I don't think anybody in his administration will like that idea. And if that does happen, that maybe the next election, winning the midterms will be completely out of picture, and then even perhaps the next election, I don't think Republicans will be able to win in that case. So I think throwing the economy into recession, I don't think that's on his agenda at all. So that's out. Another way to bring the house prices down would be to increase supply. Can he do that? Yeah, he's trying. He's trying to do some deregulations. He's trying to make it easy for people to get permits and do more building. He's trying his best, but that's not going to happen right away. We're so far behind; it might take several years. So that's number two. Number three is inflation, right? So unless the cost for builders come down, how can the home prices come down? Like if I want to build a home, the cost to build the home needs to come down. I mean, look at some of the areas like in California where to cost to build a home is 300, 350, $400 a square foot. I mean, if you're going to build a home for 400 square foot, how can you sell it for cheap? So that doesn't really work. Let's take a look at property taxes. Can President Trump really control property taxes? No. They're typically governed by your local county and your local city, and property taxes keep going up for everyone. What about insurance? Can President Trump bring the insurance down? I don't think so either. Insurance rates are keep going up in every single area that I know of. I mean, one of the biggest complaint that I hear from people is insurance. See, what's interesting is this year, when we take a look at inflation, it might not look bad. right? Because prices are not accelerating at the same pace as they were last year. But in the last 3, 4 years, they have already gone up so much. Okay. And because they have gone up so much, there is an affordability crisis. I mean, look at all of these components of the cost. Okay. And then let's take a look at our income. The biggest component is our income. If our income hasn't grown by 50%, like if price has gone up by 30%, that's okay. As long as our income has grown up by 50%, but it hasn't. And because it hasn't, everything seems to feel more expensive, especially if you compare it against gold, right? If you, I mean, depends upon what yardstick you use. If you take a look at, your dollar value and you compare it to gold, you feel like you're actually losing money. So, coming back to this whole idea about being able to take the 401k money and buy houses, is that going to kickstart the housing market? I think some people believe that. You can take a look at stocks like BLDR. You can take a look at Lennar, Toll Brothers, some other home builders out there. Take a look at their stock. They all got jumped when President Trump started talking about buying these mortgage-backed securities and letting people use their 401k plans. So we can see that. I think BLDR, I think I was looking at jump like I think 10, 15% like that. So people are certainly excited about that stuff. So I already gave you an argument that I don't expect home prices to just magically jump because of all the reasons that I just explained to you. Now, let's talk about this whole 401k scenario. What's happening with 401k? I think the 401k balances in the market right now is probably several trillion dollars. I think $9 trillion. Last time I checked, yeah, about $9.5 trillion in 401k accounts right now. 401k accounts are not designed for common person. They were not supposed to be designed for common person. I think more or less after Vanguard came about and the ETFs came, then I think things became a little bit more in favor of a common man. But at least originally, they were not designed. Uh, you know, Pension funds were kind of falling apart. There was a lot of inflation. So the market needed a product that they can pitch to high net worth individuals. And that is where these 401k accounts came about. And we do that same thing today, by the way. If you are a business owner, you're making a lot of money, maybe you're a doctor, you have a separate practice going on, you have a startup that you're making a lot of money, and you're trying to figure out how to save on taxes. Still, retirement accounts, 401k accounts are one of our favorite strategies, but you got to do it in such a way that you're not giving away a lot of that profit back to somebody else. You got to keep it all in your pocket. But do you think the common man asked that questions? I mean, first of all, common man would never really even go to a professional to begin with to ask for help because they cannot afford it. They cannot pay that hourly fees. So they would not go there. They will rely on online resources, which is, again, they'll buy some fancy books or online, and they're all going to push them towards traditional 401k account. I think, if I'm not wrong, annual fees that comes out of 401k accounts for these big banks is well over $180 billion. Think about that number. $180 billion in fees is collected just out of 401k, not out of investment. I mean, whether your investment is going up or down, these 401k vendors make money. $180 billion. Okay. Now, President Trump is saying, hey, what I want to do is take some of this money out from 401k and let people buy their homes. Now, what happens if they are able to do that? If, let's just say, so is it going to help the um, you know more home sale? Yeah, I think so. I think if some people are so desperate to buy a home, they're not never able to buy it because they never really saved out of 401k. If they can get the money out of 401k and buy the house, it's certainly going to help them. Now, question is, how does that happen? Does that mean somehow that capital gain they're supposed to get on those earnings they have in 401k, does that get deferred? Kind of like a 1031 exchange from your 401k into real estate. If that is the case, yeah, I think that can possibly work. But if the person has to pay the taxes and then they buy the homes, the only difference here is that they don't have to pay that 10% penalty that we have to pay, then I'm not so sure. Because see, what happens is now what we have done is this person has stopped compounding his wealth. stopped altogether, and he has added on to an expense. 401k plans are expensive for sure, right? You're paying 1%, 2%. Most people don't even realize how much they're paying for 401k account. But once you purchase a home, cost becomes obvious to you. Like I said, you have that mortgage payment, you have that property tax, you got maintenance costs going on. You have all bunch of costs which this person was not used to. So you're putting somebody who is not really that good at managing finance to begin with, and you're handing them this home which is extremely costly. Homes are not cheap. To maintain a home is a lot of money. For many people, it makes sense to actually rent. Sometimes it makes sense to buy, but oftentimes it doesn't. If there was a choice, like right now, if I have a choice, if I like, depending upon which area I'm in, let's just say Bay Area, for example, I would rather not buy a property. I would rather rent, because some of these properties are $2 million, $3 million. You can rent them for $5,000, $6,000 a month, and the savings you can invest into whatever, like index fund or gold or silver or whatever your favorite way of investing is. That most likely is going to have a better outcome. So I think, is it going to bring some first time home buyers in the market? Yes, it will, but I don't think it's going to help them. In matter of fact, it might actually backfire and hurt them, because A, they're going to stop compounding the wealth they were compounding otherwise. And on top of that, they would have added additional cost to their daily life. And what that would do is, now they would not have savings. Now they would not be able to fund any more money. The magic question here is, can that house compound faster than what they were doing before? Like, let's say they buy a house for half a million, can that become $1 million or something like? Yeah, possibly, right? But what about all the costs in between that they're spending on housing? So for a lot of, I think President Trump needs to take a step back and really think about, can it help the very person he's trying to help? I think it's a good way to make a headline that, hey, take the money out of 401k, but it can come back and hurt them. Now, again, I'm not a big fan of 401k. I would rather have you build your wealth in Roth IRA. Rather have you build it after tax money. So that's just your money. So I'm not a big fan of 401k whatsoever. Even in 401k, most of the time, I recommend people to do conversion and convert that into Roth and build your wealth that way. So I'm not trying to defend 401k. Like I said, they're most oftentimes more expensive. They charge fees and all that. But still, I'm saying, for a common man, who have no experience of how costly it is to buy a home and maintain it, can be devastating, because A, they're not used to that kind of cost. So all of a sudden, let's just say if they were spending $2,000 on a rent payment, now they buy a home and now they're spending $4,000. So they're not able to save. So that can come back and hurt them big time. So keep that in mind. But as far as the home prices are concerned in 2020, I'm not super excited until all of these issues are resolved. So we still need to see wage growth happening. Until the wage growth start to happen, I don't see how home prices can significantly rise. That's the magic metric. So keep an eye on that. Are people able to make more money than they were before? In matter of fact, I think things are going the other way around because of AI. A lot of people are losing job. Now, can you imagine somebody who's about to lose a job and they take all their money out of 401k and they buy real estate because somebody says, hey, real estate's going to rise a whole lot? Can be quite risky. So I hope that makes sense to you guys. Again, these are complicated topic. If you have never worked with a consultant before and you want to talk about these things in more detail, then reach out to me. Just go to taxcodeadvisors.com and let's talk about it. See if it makes sense from a tax point of view, if from asset protection point of view, is there any strategy that we can use that can bring you a better ROI? If you're thinking about refinancing or you're trying to buy something and you want to analyze the deal and get some additional thought into it, then yeah, consult, because most likely you will learn something new that can hopefully save you a lot of money. All right, thank you so much, guys, and I'll see you soon.